Hey everyone, today is May 28th and today I'm going to talk about the stock market. And I want to talk about why is the stock market recovering so quickly? Didn't we just have a lot of fear over the last couple of weeks? This pullback, inflation fears, why is it recovering so well and almost at new all-time highs? And before we begin, I wanted you to read this disclaimer and you can pause this video as you read it. Okay, so in our last video, last time I talked about the stock market, I talked about how in a healthy bull market, which is what we're in, right? We're in a long-term secular bull market from 2009. Yes, we've had some pretty violent, let me just pull up a clean chart for you. Yes, we had some pretty violent pullbacks, especially in last March, right, with the pandemic. But overall, we're still in a macro uptrend, right, since 2009, when the financial crisis pushed this market down more than 50%, right? This is the S&P 500. Now let's go back to SPY, which is the ETF that tracks the S&P 500. Okay, so I talked about how in a healthy bull market, we want to see price pull back and touch these moving averages once in a while, right? And in fact, in my last video, I talked about in April we had a gap over here, and I actually wanted us to fill this gap as we came down. We ended up actually not filling this gap, which is not that bad because now this gap acts as support, right? But still, it had been a while since we came down and touched the 50-day simple moving average, which is our short-term moving average. And also, the second thing is that as we hit this new Fibonacci levels tend to act as strong support or resistance levels, right? See how the market we had a correction here, right? Two 10% corrections over here along this Fibonacci resistance level. And when we held this level after the presidential election, we came up strong. We never came down to touch that again, right? So right now we're approaching another Fibonacci resistance level, and that's why I think we're seeing a lot of volatility, us going sideways again. Not as bad as we saw in late 2020, right? We didn't see 10% correction this time, right? Instead we saw not even 5% correction. So this is not that bad, but remember how scared everybody was like in mid-May when the market came down, right? I think a lot of that had to do with tech stocks, right? Because tech stocks came down pretty hard because there was a lot of inflation fears, right? Fears that now that the economy is opening back up, people are going out. I talked about this in the last video that one of the reasons is that because we were printing so much money last year, but the demand for products was down because everybody was locked down. The velocity of money was down historically, and so we didn't see that much inflation last year, at least on record, right? But now we're seeing a lot more because the velocity money is picking up as people start to, more people are vaccinated, more people are going out and they're spending money. Like people locked down for a long time, they want to go out, they want to explore, they want to travel, they want to eat at their restaurants, they want to hang out with their friends, they want to go watch movies, they want to go out and they don't want to stay home anymore, right? People are sick of staying at home. So we're seeing more money exchange hands now. And of course, that's going to cause a short-term shock in demand that the supply might not be able to meet, at least in the short term. So that's why I believe we're seeing short-term inflation. And this is something that the Fed actually agrees with me on. And I said that in the last article, I think 2 videos ago, I talked about how the Fed thinks that this inflation that we're seeing is a short-term event. And so they don't necessarily need to adjust rates higher, right? That's one of the reasons why the market pulled back, because people thought that the rates were going to increase. But the fact is, I told you that this could have been a great buying opportunity because the Fed literally said they're not going to increase, or they don't believe that they need to increase rates until at least 2023, right? So when we pulled back and we touched this moving average, right, like the last 3 times we touched, this was a great buying opportunity. So I talked about how personally I was buying stocks over here, but of course you always have to make your own decision, right? This is not financial advice. I can't tell you what to do. You have to do your own research and make your own decisions. But historically, I said that when we touch this moving average, this was usually a good time to buy. And another thing is, right now we are basically trending this Fibonacci line, right? This Fibonacci resistance level. But if we hold this as support, this will give us more fuel to push up higher because we basically form a strong support base over here, right? Just like we did over here. We grinded sideways for a couple months, but we formed this strong base here to push up higher, and we never came down to retest that, right? And so I think that's something we're seeing over here. I thought that we could have held support over here, but of course the market likes to test people and shake out the weak hands, and we came down one more time to touch this moving average with the gap here holding as support. And so I believe that the longer we stay above this line, right, around 412, 412, the more likely we're going to go up higher to new all-time highs. So, and I think that the inflation fears will die down over time as the supply catches up to meet the demand, right? So a short-term demand shock, just like last year we had a supply shock, right? Suddenly, like all the supply chains were affected with the pandemic, everything shutting down. But things are slowly returning back to normal. More people are getting vaccinated. Businesses are going to do better and better. So that's why we're seeing the market recover and continuing to all-time highs, right? Another catalyst to help stocks go higher is the falling dollar, right? Dollar had a short-term rise early this year, but it's faded that rise, and it continues to get pushed down. And so that's going to help stocks rise higher as people don't want to hold dollars. They want to hold things that are pegged against the dollar, like stocks, right? Of course, the yields are also important. Yields are starting to flatline a bit, and they're actually starting to come down a little bit. If the yields do continue to come down, right, here's a 10-year, that's going to give more fuel for stocks to rise higher, especially tech stocks, right? Tech stocks have been hit by rising yields, but tech stocks are starting to recover now, and we're forming this sort of ascending triangle over here, right? Higher lows, flat, and we just come and test this resistance again, and we'll push up higher. And tech stocks usually lead in a strong bull market, and I believe tech stocks will lead again, right? When people were scared of inflation, they wanted to rotate into value stocks, so that's why the Dow was going up. But now we're starting to see the tech stocks rise again, and I believe the tech stocks will lead, and that will help the bull market continue up higher and stronger than it was in the past, right? So just keep in mind that the market will pull back once in a while, right? It's healthy to pull back once in a while. We don't want this market to just go parabolic, right? It's good to keep your eyes open for the moving averages, and because that's usually keeps the market in check as it goes up higher, right? So the next Fibonacci level is going to be a lot higher. So I do think that we have like all this room to push up higher. Another thing to look at is the fear and greed index, still at 40, right? So there's still a lot of fear in the market, which means that, of course, it's not overbought or anything. So I do think that this could be a good time to get in. Of course, again, this is just entertainment. It's not financial advice. But look, the last 2 weeks we had red, right? But look at these wicks. This wick basically says that there's a lot of buyers stepping in, right, and pushing the price higher every time the bears try to push the price down, right? So I do believe that the chances of us going higher is a lot higher than us going lower. And of course, the monthly candles looking very strong. Look like we're about to close. The month of May will close next month. So I'll definitely be here next week to make a video when the monthly close happens. But everything's looking very bullish right now. Like looks like we might have 4 consecutive green monthly candles. Right, if we're able to close the month above this Fibonacci line, I do think this will act as strong support and will likely continue higher, right? So that's the stock market. I do think I'm very bullish. I've been saying I've been very bullish. I've been saying that the stock market is in a secular bull market since 2009, and I believe that stocks will continue up higher, especially as the economy recovers more and people go out and spend more money. You should see companies reporting better profits than ever before. Yeah. So I'll definitely update you guys next week for the monthly close, and we'll see what happens from there. Thank you for watching this video. If you found it useful, helpful, informative, please like this video, leave a comment below, and subscribe for updates. Thank you all again for your support, and have a great day.